Yo, what's going on, guys? I'm not a financial advisor. This is not financial advice. You get the memo every single time I say this, all right? If you want to join my Discord, okay, and watch my live streams every single day, I did a live stream on YouTube the last 2 days. If you don't know what to expect, watch those too. That's really what I do every single day, every morning session. So if you want to do that, click the WAP link in my bio. Other thing is, if you're really looking for practice on anything other than a demo account that gives you a little more emotion, okay, use an Apex account. They're 80% off right now. You can get a 50K account for like 18 bucks, I think, or 20 bucks or whatever it is. Almost no spreads on futures are so much better than Forex to trade. So if you're interested, just click that link in the description, the Apex link. And yeah. So a lot of people in my streams lately have been asking, how do I really determine the draw on liquidity? And I made a draw on liquidity before, but I'm going to kind of go a little more in depth. Okay. And I'm going to start by saying this up front. There's a few different ways to determine the draw on liquidity. Okay. And there's a way I do it, and there's a way that normal ICT traders do it on Twitter. Okay. My way, I tend to know the draw on liquidity a little later than most. Okay. But I still know it. And that's the key. That's how I win a lot of the time. Okay. But there are different setups to know the draw on liquidity. Okay. And I'm going to be going over the first method. Okay. I'm going to be talking about the first method. Which is not really the method I use very much, okay? But I'm going to talk about it. So the first method is looking at the daily candle, okay? You start with the daily, you look at the daily candle, okay? Well, you probably don't know what that means. So, well, Dodgy, what am I doing when I look at the daily candle? Okay, I'll show you what you're doing. So I'm not going to go over the strat, but for anyone who comes from the strat, it kind of applies to the strat a little bit, okay? So with the liquidity on the daily, okay, when I look at the daily chart, the first thing I always check off my checklist is, are we delivering from another PD array? Did we create a swing low, or did we create a swing high at another PD array? Okay. On the daily right now, what do you see? Okay. We created a swing low at the mean threshold of this order block down here. Okay. So that's important to note. Okay, what does that tell me? All this tells me is I'm looking for the next candles to expand up to the next high, okay? What do you mean by the next high? Do you mean the all-time highs? No, I mean like this, the last swing high. So in this case, this example. Okay, and don't worry, this is not really how you find it, okay? But that's the first thing I always check off my checklist. So I'd say, are we delivering from a higher time frame PD array? Okay, now look where the swing high is created. So if I go in the replay mode, is this a swing high? Nope. So do I really know the draw on liquidity? Not really. Is this now a swing high after this daily candle close? Yes, it is. Is this swing high inside a daily PD array? Yes, it is. And at the same time, it is very key to note we took this high, okay, with no displacement. So with this setup and this setup, okay, I always know, is the swing high in some sort of PD array, okay? Now look at this, okay? When I see this swing high created, meaning I have to wait for this daily close, why would I expect the next daily candle to be bearish? It's because I look for any unfilled inefficiency next. So the first thing on my checklist is, are we in some sort of higher time frame PD array to the left, okay? And then my second thing is, did we create a swing high there? And if the answer is yes, I then look for us to retrace into the middle of the range. Okay, and that's how I kind of get, that's how you can kind of get the bias. Okay, I don't typically do this way, by the way. I'm just showing you this isn't one way you could do it. So being that you see the swing high in the forming inside this PD array, you should expect the next few candles to be bearish, at least to this thing, to this inefficiency. Okay, why at least? Because if the bias is bullish, we're not going to go any past it. Okay, you have to watch the reaction. If you're unsure of the bias, because we're in between and we're a block and in between this, if you're unsure of the bias, I don't really play anything right away out here. I'll watch for the reaction. And obviously, yeah, I'll look for longs at first out of it just because of risk reward. But I like to see the daily reaction to this. Like if we close under, I'll be bearish. If we get like a hammer candle and then another reversal, kind of another green candle, I'll be bullish back to the high, right? I like to see the reaction. Okay, but again, this is what I do. I always ask myself, are we balancing off another PD array on the daily? And if we are, did we form a swing low or swing high off of it? So like if I went back to yesterday and I asked myself, are we inside of bearish PD or in the daily? Yes, we are. Do we have a swing low? No, we don't. Okay, so you can't really make anything of this. But now you have the swing high here because this candle, this high, closes below this one. And because this is leftover inefficiency, okay, I now say, okay, we're going to go to this. Okay, and that's when you can add in a bunch of other stuff. That's when you can look for a possible SMT here. You can look for all kinds of things here. Maybe an SMT with Dow, maybe an SMT with ES, right? You can look for all kinds of other confluences there. But that's really the main thing you want to ask yourself. Are we forming a swing high inside a bearish PD array on the daily? And are we getting a lower high the next day from that PD array? Okay, now what if this wasn't an inefficiency? What if this wasn't an inefficiency? Okay, if this is not an inefficiency, I don't really know the draw on liquidity, do I? Right? And I'm going to show you an example, okay? If I can find one. So, like right here, okay, we get a swing high here. There's no PD array to the left, but this is also because it's all-time highs. We get an inefficiency here, right here. Do we get any inefficiencies here? So, are we going to stop anywhere inside here? Probably not. We're probably going to go to the next inefficiency, okay, which is right here. Okay, but if this inefficiency is here, I don't really know where the draw on liquidity is, okay? Because this is here, I kind of know where the draw on liquidity is. And whether we violate this or bounce off this, it also tells me the draw on liquidity is. Because if we close below this, I know the draw will probably be this low, then this low. And then if we kind of come into it and we get a nice pop or green candle out of it, I know the draw on liquidity will probably be this high. Okay? But if this isn't here, you're not going to have an obvious draw on liquidity on the daily, are you? Can you still trade? Yeah, but you're going to be trading lower time frames. So thankfully, right now, we have a nice fair value gap, and it's going to tell us the draw on liquidity, whether we violate it or not. So that's why I always look for at least a PD array in the daily, because it really helps me. Okay, if this wasn't a PD array, if this was not a fair value gap, and we just rejected out of it in the middle of nowhere, I would not have been bearish. But because we kind of got this and we formed the swing high right here inside this bearish fair value gap, and we had the SMT, that kind of told me the draw on liquidity was down. Okay, so again, you always want to ask yourself, are we inside of a PD array in the daily, and did we form a swing high in it? And if the answer is yes, the next 2-3 candles are likely to keep going down, okay, in that order. And your first target tends to be an inefficiency instead of a low, because you want to see how you react to the inefficiency once we hit it. And then once we hit here, which is live, I'm going to determine a new draw on liquidity depending on the reaction out of this tomorrow or the next day. Okay? So, again, that's very important to note. Okay? So, that's one way of kind of helping to figure out the draw on liquidity. Okay? Waiting for that swing high to form, waiting for us to trade under the low where the swing high is created. Okay? And then expect us to go down to the next inefficiency or next low. Like if this wasn't here, I'd probably expect us to trade to the next low. But I want to see what happens inside here. Okay, so that's the first way. Now the second way is the way I do it. What I do is I don't really use the daily too much. I mean, I still do the method I just said, but I don't really use it a lot because I can determine the draw on liquidity other ways. What I do is I go to the 4 hour and I look for a bunch of inverses. Okay, I look to see, are we cutting through BPRs? Are we cutting through these fair value gaps? So like in this situation, if I see us just really have no respect to this and just really cut through this, well, I know the draw on liquidity is going to be the next high. Okay, and this is what I mean by I sometimes know the draw on liquidity later than other people, but I can still get winning plays because I know where it is. So I may not know this the draw on liquidity down here, but once I start seeing this, the disrespectedness of this, okay, I don't even know if that's a word. I don't really care if it is, so don't taunt me in the comments. If I don't see any respect to this, I know the draw on this in the next high. And the reason why I use the hourly and 4 hourly for this is because these play out quicker than the daily. I can get a lot more plays in with doing this. Okay, so I'm just going to show you a few other examples. Okay, so right here, if we trade above this hourly fair value gap, okay, let's say we trade above it and we close above it. Well, I immediately know the draw on liquidity is probably going to be to this high. Okay, with this high being the draw as well, and then this high. Okay, I know that's probably going to be the draw. Do I know right now? Nope. Okay, until we close above this, I do not know the draw on liquidity right now. Okay, because we're in between this hourly fair value gap, and we're in between right here. Okay, so yes, I know it late, but when I know it, I really know it. Okay, and that gives me conviction. Same thing with right here. When you see this giant red candle cut through this very easily, I know the draw on liquidity is going to be the next inefficiency. And then depending on how you react to that, I know it's going to be the next low. Okay, this low down here. All right, now another example. Like, if we go back on let's go back on the 4 hour. Actually, no, I'm going to use the 15-minute from today. 15-minute was a great example today. The 15-minute today, this fair value gap, I knew this was too low to short, okay, because we just dumped so much. I knew it was too low to short. But I knew the draw on liquidity was going to be this high right here if we closed over it. Did we close over it? Yes, we did. Okay. Did I kind of know the draw on liquidity later? Did some people maybe know it here? They probably did. But my draw on liquidity is so accurate when I wait for this to close over, and then I can look for a retracement, then get into the high. Okay, so I just wait, and I wait till it's kind of confirmed. Okay, same thing with like right here. Okay, this BPR on the 15-minute, this rejection tells me the draw is going to be the next low. Okay, as soon as I see a candle like this from a BPR, okay, that means the market's very aggressively trying to probably target the opposite liquidity pool. Okay, which would be this low right here. Okay, as soon as I see a candle like this off of BPR. If this wasn't a PD array, if this was a 0 PD array, so let's say this is nothing. Would I really think that? Probably not. But because of the nature in this price, being this was a BPR, that's how I know the draw on liquidity, because there's the reaction off it. All right. Same thing with right here. Okay, when I see us violate this fair value gap, it's singular fair value gap, right? And I see us violate that, I know if we get a green candle from this inverse, I know there's probably going to be some higher time frame target to the left that's going to be the draw on liquidity. Okay, so see how, yes, I even know them late, but I really just depend on these kind of inverses on the like 15-minute just to tell me. Same thing with right here. Right, I know once we inverse this bearish fair value gap, I know the draw on liquidity is probably going to be the next, or I know this high is going to be the next draw on liquidity. Okay, and that's really what I look for. So you can do either method. You could do the swing low and swing high method on a daily, or you can just use the inverse method on like the 15-minute, hourly, or 4 hour. It's all up to you. It's all up to your trading style. Again, I prefer this. You will not prefer what I prefer, okay? I prefer the 15-minute, hourly, 4 hour inverse to tell me the draw, okay, rather than just kind of guessing in the daily. There's upsides and downsides to both. For example, you can get in much earlier if you know it on the daily first. If you use the inverse way, you might catch a little less of the move, but again, hopefully this video helped you a little bit. This is the most simple way to do it, in my opinion. Make a checklist, okay? It's important to understand, are we at a daily PD array? If not, the draw is probably not obvious unless we're really going, unless there's a lot of momentum going towards somewhere. But look right here, there's a lot of momentum going down here, wasn't there? But then why do we bounce? Okay, it's because in that checklist, we are in a higher time frame BPR, higher time frame daily BPR. Okay, so make sure you're asking yourself every day, are we sitting in some sort of higher time frame BPR, inverse, fair value gap, order block, whatever it may be. And then base your draw on liquidity, how we kind of react to it. Okay? And you're gonna be wrong sometimes, but I think the reactions from them give you the best case scenario for where the draw is gonna be. And then that swing low method I talked about. Typically, if we form a swing high or swing low inside of a daily PD array, typically the next 2 or 3 candles end up continuing down to the next inefficiency, next low, whatever it may be. So I think that's something to look out for as well. So yeah, that's going to complete this video for now. Hope you guys enjoyed. Let me know if you have any questions. Hopefully people stop asking me this question now, but yeah, hopefully this was a good video. I felt it was pretty good. So if you made it to the end, comment the word cat. If you made it to the end, comment cat. CAT. All right. Well, appreciate you guys watching. Other than that, peace out.